Hey guys, what's going on? Welcome back to the channel. So the retirement plan income limits and the contribution limits just came out. And I'm also going to talk about the 401k, the solo 401k, the 403b, 457 SEPs, simples, Roth IRA, and traditional IRAs. And then I'm going to go over an example of making a contribution and comparing it from 2022 to 2023 to your workplace retirement plan, or if you have a solo 401k. So let me go ahead and pull it up on the screen, and I helped organize it quite a bit. So hopefully this makes it a little bit easier to follow. So here I have the 2022, 2021, 22, and 2023. The 2023 is the new column here. So for your employee contributions, you can make up to, it's going from $20,500 in 2022 up to $22,500. You can see that right here. Total compensation or total contributions to your retirement plan, which includes basically everything, your employer, employee, the match, non-deductible, the mega backdoor Roth contributions, $66,000. So $61,000 in 2022, $66,000 in 2023. And what I'm going to show you is how to maximize that in just a second. The catch-up contribution went up by $1,000 to $7,500. The 50 and over, that equals $73,500 total. So that is adding the $66,000 plus that $7,500. Then we have the IRA phase outs. So this is if you have a traditional IRA. What most people miss here is that if your income is below these thresholds, you can contribute to your workplace plan and your traditional IRA. Now you can choose between the traditional and the Roth, but you can also save into your traditional IRA if you meet these income requirements. So for singles, if you earn less than $73,000, you could do the full amount of your traditional IRA as a deductible contribution, but this is the phase out. So between $73,000 and $83,000, it phases out. If you don't know what a phase out is, it's a reduced amount through that range of $73,000 to $83,000. I have a video on phase outs, so you can go ahead and watch that to figure out the calculations on it. The same thing applies if you have an IRA phase out for married filing jointly. You are covered by a workplace plan, but your spouse is not, or it doesn't matter actually if they are or not. If you have a workplace plan, this is the phase out, 116 to 136. Now, if the IRA phase out for married filing jointly, you do not have a workplace plan, but your spouse does. So if you don't have a plan or you're doing a spousal contribution, that requires a phase out only if your spouse has a plan. I know it sounds super complicated, and it kind of is. 218,000 to 228, and then the Roth IRA contribution limit is going from 6,000 to 6,500, and it's been 6,000 for a while. Now it's going another $500, so you can do that into your traditional IRA, which also includes your Roth IRA. So those are an aggregate amount. So if you're going to put $6,500 into the Roth IRA, you can put $0 into your traditional, or you can balance it out. So $6,500 is going to be the new maximum Roth IRA contribution, including the traditional IRA contributions. And there are also income phase outs on it. So singles is now $138,000, phases out at $153. For married filing jointly, this is going up to $218,000 to $228,000. And you can see the 2021 and 2022 numbers right here. So it is going up. We had quite a bit of jump on basically all of the numbers. Now for simple IRAs, it's going to $15,500, catch-up contribution at $3,500, bringing that total, if you're 50 or older, to $19,000. And then I had the Savers Credit also increased. The Savers Credit, if you earn this amount or less, so if you're married filing jointly earning $73,000 or less, you would qualify for the Savers Credit. That's by making a contribution to your retirement plan, any retirement plan. You then get a tax credit just for making the contribution. So $73,000 for married filing jointly, $54,750 for head of household, and for singles, that's $36,500. So these are the new limits that are going into effect for 2023. Let's jump over to figure out how we can make the maximum contribution, because here's where a lot of people get really confused. How do you get the most amount inside your retirement plan? So I have I'm calling it the Solo 401k calculator, because most of these calculations, that's what we do them for. But this calculator right here that I put into this Google sheet is exactly this, and I'm going to show you. I'm going to pull it up. It is this right here. It's from publication 560. This is the worksheet to figure out the maximum amount that you can put into your retirement plan, whether or not it's a workplace plan or a solo 401k. The math is the same. The only line that's going to be different is this net earnings from self-employment. But the amount that you can put into the plan is still going to be the $66,000. So this calculator is for solo 401ks if you're self-employed. If you are not self-employed, if you have an S corporation, you are not self-employed. Therefore, it is not this calculation. But let's just compare the two really quickly, just so you can get an idea of the contributions. And I will show you how to get more money into your retirement plan really quickly. Not going to go through all of the math. I'm just going to breeze over this to compare the years. So I have 2022. This is actually 2021 right here. 2021, 2022, and 2023. So if you have a net profit of $100,000, the math is the same up until the limits. So you can see right here, we have income limits that can be attributable to this amount, which don't apply to $100,000. And then you have your maximum contribution limits. So for 2023, it's $66,000. Last year, it was $61,000, or for this year, it's $61,000 for 2022. So if we just go down and we figure this out, then we can do all the math, and you can see down here, if you have a net profit of $100,000 for 2022, that maximum is $39,087. It then goes up to $41,087. Now, a lot of the calculators that you're going to find out there will give you these numbers. What you can do, as long as you earn $66,000 or more, then the difference between these numbers and $66,000 is what you can do for a backdoor Roth contribution. So this is the mega backdoor Roth contribution. You make a non-deductible contribution and then immediately convert it, and then it ends up in the Roth. That's how you get $66,000. This is something I do for myself every single year. I do this math. I put it all in the traditional side doing this math, and then I take it and I flip all the difference over to the Roth side. I have an S corporation. That's the business that I run it on, so I don't do exactly this math, but that's how I get the full amount. So for 2022, it's $61,000, and then it'll be $66,000 for 2023. So this just came out. Hopefully this helped. If you have any questions on this, let me know in the comments down below. If you've enjoyed this video, be sure to subscribe, and we'll see you on the next one.